Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about TXNM ENERGY INC quarterly report. TXNM ENERGY Inc. provides a wide range of businesses and services including electricity generation, transmission of electricity, distribution of electricity to retail customers, regulated transmission services in Texas, regulated distribution services in New Mexico, leasing of communications equipment, leasing of office space, leasing of vehicles, ownership of energy storage facilities, ownership and leasing of real estate, provision of electric services to residential, commercial, and industrial customers. The recent surge in TXNM Energy Inc.'s stock price can be attributed to several key events. The most significant factor was the overwhelming approval by shareholders of Blackstone Infrastructure's acquisition of the company. This news sent shockwaves through the market, driving up the stock price by over 37%. Additionally, the declaration of quarterly common stock and preferred dividends by TXNM Energy Inc. subsidiaries further boosted investor confidence. However, a law firm's investigation into the fairness of the proposed sale has raised some concerns, but its impact on the stock price increase is still unclear. The primary drivers of revenue growth or decline are multifaceted, influenced by various factors across different segments and markets. On the growth side, the industrial segment, renewable energy procurements, and customer distributed solar generation program have been key contributors to revenue expansion. Additionally, climate scenario planning and risk management initiatives have also driven growth. On the other hand, residential and commercial segments, economy, energy service, capacity arrangements, and milder weather have led to revenue decline. Furthermore, higher operating expenses at PNM and TNMP, increased depreciation, and market price fluctuations such as fluctuating commodity prices, interest rates, and equity prices have also impacted revenue negatively. Regulatory and market factors, including changes in electricity usage, variability of prices, and regulatory orders, have further influenced revenue growth or decline. Overall, a combination of these drivers has shaped the company's revenue trajectory, highlighting the importance of adaptability and strategic planning in navigating changing market conditions. The company's financial performance has experienced a decline in both net income and profit margins. Net income decreased by $75.3 million quarter-over-quarter, (QoQ), and $54.7 million year-over-year, (YoY). The gross margin also saw a significant drop, decreasing by 1.2% QoQ and 7.5% YoY. However, the utility margin showed an increase of 1.9% QoQ, but decreased by 1% YoY. The main reasons for this decline in gross margin include higher plant maintenance costs, increased employee-related expenses, and other factors. On the other hand, the utility margin saw an increase due to various factors such as rate relief, transmission revenues, and capacity arrangements. The absence of any impact from mark-to-market commodity derivative instruments also contributed to the net income stability. Overall, the company's financial performance has been negatively affected by a decrease in gross margins, which outweighed the slight increase in utility margins. The company's operating cash flow performance, an analysis of the company's financial summary, reveals that it generates both positive and negative operating cash flows. While there are instances where the company achieves a significant positive operating cash flow, such as $426,790 in 2024 and $349,521 in the previous year, these results are not consistent across all periods. In fact, the company also experiences negative operating cash flows, including minus $493,400,000 in 2024 and minus $447,100,000 for the 9 months ended September 30, 2025. This inconsistency suggests that the company's ability to generate positive operating cash flow is not reliable, making it challenging to determine whether the company is truly generating a consistent positive operating cash flow. The company's debt level has undergone significant changes over the past year. Initially, it increased significantly in 2024 with a rise of $197.1 million due to revolving credit facilities and term loans. However, this trend reversed in 2025 as short-term borrowings decreased by $492.6 million net. Furthermore, repayments by PNM and TXNM contributed to a decrease in debt level by $350 million, $51 million, and $210 million respectively. In terms of interest expenses, there has been a notable decrease in some periods. Specifically, interest charges decreased by $8.9 million, $22.3 million, $5.9 million, and $16.8 million at different points in time. Additionally, the issuance of convertible notes led to a further decrease of $14.1 million in interest charges. Overall, while debt levels increased initially, they have since decreased due to repayments by PNM and TXNM. Interest expenses have also seen a decline in some periods, indicating a potential reduction in financial burden for the company. The company's financial performance varied across its segments and regions. Notably, PNM and TXNM performed well, with higher services billings in 2025 compared to the previous year. In contrast, TNMP struggled, experiencing lower services billings and a decrease in tax benefits related to stock awards in 2025. These results indicate that while some areas of the company are thriving, others require attention to improve performance. Management is outlining a comprehensive strategy for the company's future growth and sustainability. Key initiatives include transitioning to a carbon-free generating portfolio by 2040, investing $344 million in infrastructure over 6 years, and allocating $8.6 billion for capital spending from 2025-2029. The company is also prioritizing wildfire prevention and mitigation efforts, while emphasizing the importance of fair regulatory treatment to ensure allowed returns and lower costs for customers. Overall, management's strategy aims to position the company for long-term success in a rapidly changing energy landscape. Acquisitions and divestitures overview. The company has made significant investments through acquisitions, expanding its renewable energy portfolio. Key acquisitions include La Joya Wind II, Lightning Dock Geothermal Plant, a proposed merger with Blackstone Infrastructure, and several solar facilities. These additions aim to increase the company's clean energy output. On the other hand, the company has also divested certain assets to focus on more sustainable operations. Notable divestitures include the sale of NMRD, coal-fired generating facilities, and the transfer of TNMP assets to PNM in 2007. These moves are part of the company's efforts to reduce greenhouse gas emissions and transition towards cleaner energy sources. The company has also issued securitized bonds related to the retirement of coal-fired generating facilities, further demonstrating its commitment to sustainability. Overall, these acquisitions and divestitures reflect the company's strategic focus on renewable energy and reducing its environmental footprint. The company has a history of distributing wealth to its shareholders through two primary means. Firstly, it has paid dividends in the past year, with a notable payment of $118,855,000 recorded on page 12. Additionally, the company has also opted for share buybacks, as mentioned on page 124. When concerns about inventory buildup and supply chain disruption, there are indications of potential problems with inventory buildup and supply chain disruption. Financial data shows significant increases in fuel burn and purchases for resale on page 47, suggesting that inventory levels may be rising. Additionally, purchases for resale have increased substantially over the past 9 months, page 48, which could lead to a buildup in inventory. Furthermore, although not explicitly stated, indicators such as increased energy production costs and cost of energy on page 113 may suggest potential supply chain disruptions. These findings raise concerns about the company's ability to manage its inventory and supply chain effectively. That concludes the financial summary for TXNM Energy INC. Feel free to comment below, and I will be happy to answer them when possible.